there, I'm Surabhi Upadhyay and I'm a markets host with CNBC-TV18. Now, usually you will find me in the studios as we track the ups and downs of the stock market, the daily roller coaster. Today, however, I am not in the studio. I am in the CNBC-TV18 Markets Cafe. This is a brand new digital offering where I'm planning to have some interesting conversations over coffee, throw in some markets, throw in some money. It promises to be something really refreshing and really interesting. So thank you all for tuning in to our first inaugural show. And let me now introduce my very first guest as well. Today, joining me on the CNBC-TV18 Markets Cafe is Gautam Duggad, who is the head of research at Motilal Oswal Institutional Equities. Gautam, thank you very much for coming in and welcome to the Markets Cafe.
Thank you. Thank you so much for having me.
Usually we sit you down in the studio, then we start asking you what's happening with earnings season, where is the Nifty going? But today we thought, take it a little easy.
Sure.
And I'm seeing that you've left your jacket and tie behind. So I think we're in the mood.
Yeah.
So first things first, it's the Market Cafe. So pehle to aap ye bataiye, what will you like to drink? Tea, coffee? We have some
Just
ginger
some
tea.
coffee. Yeah, some coffee.
Just some coffee? Okay, great. So can we have 2 coffees, please? Long day?
Yeah, not so long actually. It's middle of the day still.
Middle of the day? The market's shut and it's still middle of the day for you?
Yeah,
My
For
God.
research guys, it's always middle of the day at
Middle of the
3:30.
day at, right now when we're having this conversation, it's just about after 4 o'clock in the evening. But all the glamour that we see, all the money and the razzmatazz, I guess there's a lot of hard work that goes on behind it, right?
Absolutely. Because there's a lot of thing that moves behind that price sticker.
Behind that price sticker, which we track and the up and down and all of that.
Absolutely.
Phenomenal, phenomenal. So, before we get started, I want our viewers to know a little more about you.
Yeah, sure.
Now, for all these years, over a decade and a half that I've been tracking markets with CNBC TV18, Gautam has been our go-to person. Whenever there are big moves in corporate earnings, whether sectors, there's something changing in policy, we rush to him and ask him for his help. It's been a long time with Motilal Oswal for you, right?
Yeah, so we actually have completed 11 years just last week with Motilal Oswal.
Oh, congratulations.
Thank
Long
you.
stint.
Thank you. Yeah.
And how long in the equity markets before that? You were also working with a couple of FMCG companies, weren't you?
No. So I worked with one only. So I
Okay.
started my career with Procter & Gamble. So that was
Ah.
my first job, 2005 to 7, after I finished my studies from IIM Calcutta.
Okay.
And then 2007 August is when the market bug took over.
2007.
2007 August.
The super
Right
euphoria.
in the middle of the
big
euphoric
ride.
bull run
Okay.
of 2007-8.
Oh yeah, how can we forget?
So now almost 16 years into the market.
16 years
Out
in the
of
stock
which
market.
you can say first 8 years I tracked consumer as an analyst, and last 8 years I have been head of research and strategist.
Still like it?
So yeah, I mean 50-50 basically, sector and strategy both. So I now handle head of research responsibilities and also ride on strategy and do a lot of team-related
Sure,
responsibilities.
sure. Okay, fantastic, fantastic. Why don't you check your coffee?
Yeah,
That's
yeah,
fine, then
sure.
we'll get going.
Perfect.
So, Gautam, so one of the reasons we thought we want to have a different conversation with you today is that there's this growing buzz in the market in terms of what next, what's the next trigger, or aage kya aane wala hai. Everybody's now beginning to talk about elections,
Correct.
right? Some activity has started. We've started seeing some policy changes. LPG prices, for instance, 200 rupees ka cut aa chuka hai wahan pe. And I think increasingly people want to know whether this buzz will increase and whether you need to start looking at your own portfolio differently. So that's one of the main reasons we thought we want to sit you down and try and understand that. So first basic question, what do you think? Is there a clear correlation between elections in the country and the stock market?
Oh, definitely there is in the short term. Definitely there is a big correlation because election is such a big policy event for markets. Because elections decide the outcome of who is going to run the government, which in turn decides how the economy can function, because different parties have different economic ideologies, right? Whether you have a stable coalition, whether you have an very fragmented coalition, or you have a single party majority. That has a significant implication on how the economy functions, how the policy momentum for the economy is, and ultimately market is a subset of the economy. So I am a firm believer that from a short to medium point of view, term point of view, you have elections, which is a very important event. However, if you are looking at the markets from a very long-term picture, say 10, 15 years, then obviously elections will come and go. Then the only thing that matters is your corporate earnings, because that's the single largest driver of market.
As long as
But in the
companies
short
make
term,
money,
yes.
stock
Yes,
prices move higher, and
definitely,
it's just a no-brainer, right?
Yeah. I mean, you've seen that happen already for last 10, 15 years. So many events have happened politically, geopolitically, crude going up and down, governments changing multiple times, right? But look at it this way, 2010 to 20, and this is my favorite data point, Nifty gave you a return of 8.5% compounding.
2010?
10 to 20, FY 10 to 20,
Okay.
10-year period.
Whole 10-year period.
Yeah. And that point of time, the corporate earnings corresponded to just 6.5%, right? 2020 to 23, FY 20 to 23, markets have given you 27% CAGR.
Which has been a phenomenal period for the market,
but it's been
right?
backed by an equally phenomenal earnings CAGR of 23%.
And imagine coming out of COVID, when it seemed like the world is ending,
Absolutely.
we came back with a bang.
Yeah. So
big
market
move,
over a very long period of time has broadly tracked earnings. In between, a lot of things drive the markets on a day-to-day, quarter-to-quarter, month-to-month basis. Politics, how the commodities or how the interest rate or what Fed is doing, etc., etc.
And elections is one of those kind of triggers.
But it's a very big event.
It's a very
in
big
the
one.
short term, very big event.
You know, I was reading a pretty interesting piece of research written by Chetan Nair of Morgan Stanley. I mean, he's one of their key strategists. Now, he did some research for the US market. He went back, I think, saw data over 100 years to figure out how the US market reacts to elections, if there's a correlation there or not. Now, interestingly, his thesis is that, at least in the US, stock markets are not partial to any particular party. I mean, sure, there was some data that came up that I think stock markets over a 150-year period, they rose more when Democrats were in power than Republicans were. But I think the point that he was making, at least with that market, is that it's not so much about which political ideology, but there was an interesting trend that whenever the incumbent government was continuing, markets kind of ambled along, kind of lost some momentum, and wherever a challenger was coming into power with some interesting fresh ideas, the US market had a little more kind of momentum coming in. Is there any correlation between ideologies at all? I mean, does that even matter? I mean, how does the market read a change in government or a change in the political dispensation?
So this is very contextual, Surabhi, because we are talking at this point of time where we've had 10 years of a single party majority government after like 25 years. 1989 was the last time we had a single party majority. After that, there was a 25 years of coalition era, right? Then 2014 till now, we've had again 2 consecutive terms of a single party majority government. So in our case, the conclusion and therefore the understanding, you have to always keep the context in mind, right? Because we came to 2014 after a period of a very, very subdued macro, you can say. There was terms like policy paralysis were being used. There's a lot of issues on the governance, corruption, and all of that, right? So coming from that background, we actually had a single party majority government. Now, last 7-8 years, you've seen multitude of reforms, really big picture reforms, GST, RERA, IBC, and digitization, payments revolution, digital infra, physical infra. So at this point of time, I think markets will value continuity. Having, another term for a majority single party government, that is something which market will really value. But going into the past, I mean, because I was looking at some data points. If you look at the last 5 elections from 1999 till 2019, right? So almost 25 years, 5 different elections. And if you look at the data for markets, just 6 months before the election, that is the day of counting and announcing of results, right? So if the results are going to be in, say, May 24, you will look at it from November 23 to May 24. You go backwards, last 5 such elections, 99, 2004, 9, 14 and 19. Every 6 months prior to election, market is rallied.
That is why we have you here, because we're just at that phase, right? 6-7 months before the election.
The magnitude of rally has been very different. So if you look at 1999 till 2004, or rather 99 election from you can say May 1999 till October 1999, because that time elections happened in October 99. Markets rallied 36%.
In 99, 36%?
Yes, 36%.
Wow.
2004, the market rallied just about 10% before the results.
And 2004 was the, I mean, I was also looking at immediate reactions on the day before the day.
No, we are right now talking just before the election results gets announced.
And
yes.
that was the India
the build-up
phase.
period. Yes,
I remember. Yeah,
2003 October or November till May 2004, markets rallied 9-10%.
Okay.
2009, you've had a huge 31 or 32% kind of a rally, right? Then 2014 again, you had a 20% rally from September or maybe November till again May.
Going
exact
into
6
the
months period. Yes.
Yeah.
And 2019, you had a 10% or 11% rally.
Okay.
So 5 consecutive elections from 1999 till 2019, markets have always rallied 6 months into the election, counting on the day of announcement of.
Okay, so Gautam, this is really, really interesting. What you're telling us that at least in the last 5 election cycles, the market has rallied going into the event.
Yes.
At least 6 months. 6 months a rally basically shuru ho jati hai. Which is good because we have you at the right time, because now I can ask you how to start preparing for this rally.
So last 5 instances have been very clear. You got rally ranging from 9-10% to about 36% way back in 1999. 2009, I would also categorize as a very unique year because there's a year when elections also coincided with the recovery that we saw from the GFC crisis.
Global financial crisis.
2008.
Yes.
Right? We, I think, bottomed out somewhere around October 8. Sensex was some 8,000, I think, if I remember well. And market started rallying after that.
Yeah.
And that period also coincided with that pre-6 months to the elections period.
Right.
And it continued after the election because the UPA government got the majority in 2009. Market hit a upper circuit of 20% after the election.
I remember that, yeah, because I think that was the period where the election result was announced over the weekend. Market came back with a bang.
Yes.
And that Monday was like, it was just completely insane buying happening on that Monday. So yeah, 2009 was pretty historic in terms of the reaction that the market had to elections.
Yes. And then it continued because you got some 31% rally 6 months before the 2009 elections. If you look at 6 months later, the markets rallied another 36%. So that was a very unique year because it also was the year where entire global markets, they rallied after, the 2008 correction.
Because we were coming out from, the mother of all financial crisis in 2008.
Yeah.
And then there was a period of recovery.
But rest of the periods, the other 4 periods, 6 months after the elections, you got very muted returns. Right? Like 2004, after 6 months, the market is up 8-9%. 2014, about 15-16%. Because there's a major change in power. 2019, markets were flat 6 months later.
Because it was continuity. It was sort of same government continuing with its policy. So market wasn't too excited maybe. From a political and from a policy standpoint.
It is just continuity. Market digested the election results quickly and moved on from then.
Basic sort of thing to ask here is that now that you've told us that history is proving that typically there are rallies going into the election. So it's only logical, right, that we need to check our portfolio, maybe make some tweaks, maybe add some of the hot sectors. Would you agree?
No, I would agree because Surabhi, this year, 2023, particularly the mid-cap and small-cap indices are already up 25-26% YTD, from January till September. So it's not as if that we've not rallied. We've already rallied, especially mid-cap and small-cap. Nifty Sensex, they've been relatively more subdued. Relatively, the valuations are also more attractive in large caps today. Your mid-cap index is trading at a 15% premium, right? And mid-cap, you can see a lot of subspaces, categories, sub-segments, they've heated up a lot. There are stocks which have rallied 60, 100, 200% in a matter of 8-9 months. So I would rather say and categorize it a bit differently that if you're looking at the period going into the elections, then probably large caps today offer a much better risk reward purely on valuation basis.
So I just want to give you a sample of questions coming in. It'll give you a sense of the excitement out there on social media as well, right? Viraj Joshi is saying, which Indian companies will benefit more from elections? How do I build my portfolio? Priyesh is saying, do stocks like Pratap Snacks or Patanjali Foods, FMCG in general, does this sector benefit ahead of elections? Hiren is saying, should one be buying more paper? This is really interesting, paper or media stocks, because the amount of advertising, political advertising, tends to go up. Commonsensical questions. So, you know, our viewers are pretty excited. So, help us wrap our heads around this. What to buy before the election?
See, Surabhi, basically, your sectors are not so dependent on elections. You will have some few months here and there where elections decide the fortune of the sector. First of all, you should not build a portfolio for elections.
Okay.
You should have a portfolio before elections also, and after elections too.
Absolutely.
Maybe you can make some tweak here and
some
there,
little
depending on
changes
your
here
understanding of different sectors.
Okay.
So typically, if you notice, going into the election, governments are always very hyperactive on spending, be it infra or be it consumption, because they always want the consumer sentiments to be upbeat. Right. Infrastructure has been recovering after a long time. I mean to say the capex cycle.
Correct.
The private capex cycle, which has been very subdued for a large part of the last 7-8 years, has started recovering in the last 12-18 months, and which is why you've seen industrial stocks, stocks belonging to the infrastructure, capital goods, defense, those areas, they've already done phenomenally well in the last 12-18 months. So I wouldn't really hazard a guess as to which particular sector you should zero down on and then, market with the election brush that this is a sector for election and this is a sector for perpetual, sort of portfolio. I wouldn't do that. Yes, at the margin, you can say some of the infra spending will definitely get accelerated as you head into the election season. Also remember the fact that there are 4 state elections in November, December. Right?
Yes.
That will also see a lot of spending from government as well as the candidates who are fighting those elections.
Right.
So a lot of money gets spent in all these elections, which ultimately trickles down to the bottom of the pyramid. Right? And we have seen in the past that because of the election spending, after some lag, you generally see consumption picking up. So infrastructure, consumption, these are 2 broad buckets where I would sort of say elections generally benefit. And then you have financials which are already on a roll. Banking has been a bit subdued, but do remember that in terms of corporate earnings, the banking, financials, NBFC and non-lending stocks have already done really well in the last 4-5 years. And this year also they're expected to do well on earnings.
I want to come back to that point on capital goods, and I was looking at more questions that were coming in on social media. And Deepak Kishan, he really sums it up, I think, for everybody. And he's saying the same thing, that capital goods manufacturing has been the space to be in. But the question is, now that the rally has already happened, should we actually start booking profits before elections, or can you still add to positions, buy more, or at least hold positions? Like you mentioned, these stocks have gone completely crazy. So what to do?
So here you have to be very bottoms up. You cannot paint the entire sector with the same brush. There is a possibility that even in a sector which has rallied so much, there might be few stocks where the risk reward is still looking favorable. But if the stock has already run ahead of its fundamentals, right, re-rating has been phenomenal, and you feel that the earnings are not matching with that, then maybe you should, take out your money and redeploy it somewhere else. But I would say that look at it from a bottoms-up perspective. First, sector to sector, and then within sector also, because the returns of different companies within sectors have also been very different. It's not that a sector has given 10% return. That doesn't mean that every company in that sector has given similar return. There are companies which would have given 50%, and equally there will be companies which would have given minus 20%.
So which ones in this bucket, in this basket of capex, industrials, which ones do you like the most?
So my preference is towards the core capital goods companies, because that is where you are seeing the emergence of cycle after a long time. In fact, in India right now, a very interesting thing is happening in markets. There are 5 or 6 sectors which are domestic cyclical spacing. They are having an upcycle at the same time, almost after a long time. Right? So number 1 is capital goods, or broad private capex or capex industrial sector after 12 years. Then you have auto, where there is an upcycle going on after 5 years. Between 2018 to 2023, when the financials profit went up 5x, the auto profits were same, right? So auto is seeing a cycle after 5 years. Then there is hotels, which is seeing a cycle after 10 years.
We know that as consumers also,
Absolutely.
Right? You'll never find a reasonably priced hotel room anymore.
Then real estate, again after a decade, you are seeing an upcycle.
Yes.
And last but not the least is hospitals, where there was no cycle which I can remember of. Right? Because there were not many companies to play also in that space. You've seen a lot of new listings happening in the last 4 or 5 years. In fact, in our conference, which we just concluded a fortnight back, 19th Annual Global Conference, we had 2 main track CEO speakers from hospital space. So there's a 4 or 5 sectors where you're seeing domestic cyclical sort of tailwinds.
Hospitals, hotels, industrials, auto and real estate.
estate, yes.
That's actually really powerful, right? 5 big themes, big sectors which are on an upswing.
Yeah.
And obviously that brings a lot of momentum with it. So we discussed industrials. Now let's talk about, another element which I think people will start worrying about. Let's talk about that LPG price cut, right? We had that 200 rupees cut coming in on cylinders. What's your view on the sector, on some of these oil marketing companies? And B, is there a real worry that we'll keep getting more of these populist measures which make Janta happy? Let's face it, it makes you and me also very happy, right? Whether it's tax changes, more freebies, and if that starts happening, will that be bad for the market?
So, two different questions. The view on the sector, I've generally stayed away from this sector because it's very difficult to predict earnings there. Plus, there is a lot of government involvement and there is a lot of volatility because they don't have pricing power. Coming to the second question, which is the giveaways or handouts, I think the quantum is what is going to decide the reaction of the market. If it's a once in a while, 200 rupees here or there, see, look at it this way. The inflation has also gone up a little bit. We've been upwards of 5.5% for some time. And in an election year, any narrative around inflation makes a huge difference.
200 rupees tomatoes. Now they've come down.
Yes.
But,
but inflation and news around inflation and how it is perceived is always very, very critical and sensitive, more from the point of view of an incumbent. This government has drawn a lot of praise on their fiscal management. They've been very consistent and credible in terms of the overall management
managing the deficit.
The arithmetic of the budget has become far more credible in the last 6-7 years. Earlier they were always very, I remember in earlier days, after the budget, people always used to ask a lot of questions, whether this maths is believable or not, right? So those questions have stopped.
Okay.
Therefore, government also needs to remember that what they're going is also going to have an implication on their reputation as far as fiscal rectitude is concerned.
Sure.
So I am not going to get too worried about one of these measures getting announced, but remains to be seen because we are still 8 months away from the elections.
So got it. I think we need to basically watch out for the way these handouts and freebies, if at all they come, and what is their size. If it's big, then it could be a problem for the market. As long as it's more or less usual what we see every election year.
Because do remember the size of our balance sheet. I'm talking about the central government. It's gone up to 44-45 lakh crores now, the total expenditure, right? So if your total spending on all freebies, giveaways, whatever promises you're doing is a minuscule percentage of your total budget, total expenditure, it's fine. I will not get, disturbed by the size in terms of the quantum size. When I say quantum, I basically mean as a percentage of that state's balance sheet and not the absolute number.
Not the absolute number. As long as it's as a percentage of your total size, your balance sheet, as you're saying, as long as that remains in check, it will be okay. Got that, Gautam. So now sum it up for us, and you've got to give us some election stocks, right? I mean, I'm calling them election stocks because, like we discussed, that maybe for the next 7-8 months, they could benefit from the sentiment, from the momentum. So if you were to, name 2 or 3 ones which are good election stocks and also good stocks otherwise.
Absolutely.
Which ones would they be?
So, Surabhi, if you look at our model portfolio, some of those stocks are already present there.
Okay.
So, we are quite positive on capex and auto.
Okay.
And I think given where interest rates are, given where the policy momentum is on manufacturing, infrastructure, the whole capex theme, they can continue to do well if there is a continuity in the government formation. Right? So, we have, say, for example, stocks like L&T, the big weight, stocks like Ultratech, Godrej Properties, even SBI for that matter, SBI and ICICI, because in a very indirect way, they also benefit from the higher capex spending that happens in the economy.
They fund this
will fund those big
industrial
projects,
expansion
right?
that's going on.
So that is on the manufacturing side and capex side. On the consumption side, we are heavily overweight.
Okay.
Right? We have the highest overweight on consumption. We have about 19% weight allocated to a consumption stock.
And that's what kind of consumption? The
So
toothpaste, sabun tel, or the movies and the hotels?
Yes.
Discretionary.
Yeah.
Okay.
So our single largest preference for a very long period of time, for last 8-9 years, has been Titan. So that's part of the model portfolio. Then we have both the hotel stocks in the model portfolio, which is Indian Hotel and Lemon Tree. We have Zomato, which we added about a couple of months back, right? Then we have Kajaria, Metro. And on the staple side, we have ITC and Godrej. So about 7-8 stocks, which together comprise about 19% of the weight. Okay. And then the usual, big part of the weight in any model portfolio will always find allocated towards financials. Within financials, we have one difference. which is that we have a big overweight on PSU banks,
Okay.
whereas relatively neutral on private banks,
Okay.
right? So our big overweight is on SBI and Bank of Baroda, and private banks are neutralish. And then we have a chunk of NBFC stocks where we are quite positive. So names like Bajaj Finance, Mahindra Financial, Piramal, they dominate our portfolio. And last but not the least is auto. As I keep telling you, that auto has turned around in a very strong fashion.
Yeah.
After 16 consecutive quarters of earnings downgrade, last 3 quarters you have seen upgrades, right? And this quarter again, auto was the best performing sector on earnings. So we have big overweight there. We have stocks like M&M, Ashok Leyland, Bharat Forge, and Craftsman. So that by and large, basically
that's the
merges.
overall. That's the overall portfolio. But I'm going to ask my question again. Now, give me 3 or maybe 4 stocks, which are like probably good plays. Elections being one big trigger, but next 6-7 months, you think from this whole big portfolio, the 3 or 4 that you'd really watch out for, that you think will do well.
One would be L&T.
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 Yes.
Second will be Titan.
Titan.
And third will be Ultratech.
Ultratech.
Yeah, this three.
Very interesting.
Because they together, broadly represent your capex plus industrial plus consumption theme.
I was at a Titan store, I think last week or something. The way I see the crowds there, and the festive season hasn't even begun just yet. So, really, I think
it's reflected in the numbers also.
Yeah.
It's one of the few consumer companies which consistently grows top line at 20%, right? Whereas most of the other consumer companies, staples, if you look at the last 5-10 year compounding, their top line has not crossed 10%. Hardly 1 or 2 companies have grown their top line at 10% plus each.
Imagine, people are buying jewelry probably at a higher rate than they're buying.
That's a classic income effect, right?
Yeah, wealth effect. We've discussed so much of business and work, but I want to know more about what you do. Do you get time at all? Considering, 4 o'clock is mid-afternoon for you. So what do you do to relax after work?
So I read a lot about a lot of things. So I read about politics a lot. That's a hobby after markets, obviously.
No wonder you know all these trends like the back of your hand on elections and politics.
So I like reading and listening to a lot of things around politics of the past also and the current also. And I spend a lot of time these days, last 2-3 years post-COVID, browsing through the OTT
You're a
apps.
huge OTT buff. I remember our conversations where Gautam will always know the latest things to watch and the hottest trends on
so that I started
OTT consumption.
post-COVID when I was at home and had very little avenues to sort of de-stress.
What are you watching these days?
So I finished this latest one which has come, Telgi.
I'm neck to neck. At least there I've also seen Telgi, so I feel good. Yeah.
Then I've seen the one on Sony also, Trial. Dahad on Amazon, I think. And couple of, I think they released some short movie in Amazon 2 days back near series.
So whether it's market trends or corporate earnings or politics or the latest on OTT, fantastic. You manage it all. Phenomenal. Well, Gautam, it's been an absolute pleasure. Thank you so much for coming out, taking out the time, having this cup of coffee with me. And I think this was a very, very good conversation. Really enjoyed it.
My pleasure.
Thank you very much. And see you again. I'm sure we'll have you more often in the cafe, not just in the studios. So see you again soon.